point is this: we want to have a discussion around the opportunity in European venture capital. And maybe, Marcus, I can talk to you, because it's unusual for somebody, first of all, to have hit it way out of the ballpark. So congratulations for what you did. But then you set up 2 venture funds. And Reza, please come and have a seat. You set up 2 venture funds, and then you decided to go out there and build again Gropia. So just give us a little bit of a perspective on what that took and why you did that.
Sure. I mean, background-wise, I started my first company when I was 20 in Austria. First one bombed, so we got some investments there back then, and then we failed miserable in 2004, and then started another company and sold this one in 2006. And I started an Austrian company, a food ordering company, in 2008, and did that in China, where I was for 4 years. And then we came to Germany and basically started a German food ordering company with the technology from Austria. And a year later, we started another company, which was Delivery Hero, and then bought all of those other companies before. I did it until 2015. So
pretty clever, by the way, to do that.
No, yeah, afterwards everything looks clever. That works. I think the first company was also clever, but it was just a little bit ahead of its time, because we did massive multiplayer gaming in 2000, which was very early. And then basically from 2015 on, when I left operationally, we started 2 venture funds. And the idea there was to do different venture funds in a way. But back then, this whole idea of venture partner, entrepreneurial partner wasn't there, right? People that run still a company, but others that are the managing partners and run the fund full-time, but there are some partners around that maybe still run their own companies, but bring the know-how from daily running a company in there. We have a bit of their time, right? Because you know the newest tools, you know the fundraising problems, you know the investors, and you bring this know-how in there, because if you meet investors that have invested for 5 years after they exited the company, they are very far from knowing what you really operational have in terms of real concrete problems. So this is how we started Cavalry Ventures, and we are very happy that the KfW and EIB and the IF is in there. It helped really tremendously, and it's, I think, a very good stamp of approval after very long due diligence processes. So we're very happy about that. And then I started another fund at the same time that came out of a company I started. So it was not that we started a fund first, we started Bitcraft Ventures back then, and this came out of a holding company for esports. And then become an esports digital gaming fund. And there I'm completely now out. In one fund I'm still a GP from the historical side of things. But yeah, both of those funds are currently, I think, Cavalry is smaller, but both are like a billion in assets, in investable volume, in AUMs.
Just for kicks, you thought that you would create the software for building something which you're going to tell us about tomorrow, so we'll look forward to that tomorrow. But Jörg, can I ask you to respond to that? Is Marcus, if we have, I always think, when you do like a talent placement, you always have to have a benchmark candidate, right? Once you got the benchmark candidate, then you go wide, right? Is Marcus the benchmark candidate for venture capital in Europe?
Well, I think Marcus certainly is a lighthouse or a role model in Europe, but I think there are many, or there could be also other benchmark candidates or other role models. I think what's really important for us when we invest in is we really look at the team, because when you invest in real estate, you look at where the location is, location. In venture, it's team. So this is really important. For us, unlike for other investors, we do not look that much on the track record of the team. I mean, we also invest in first-time funds. This is because and Cavalry at that time, you were a first-time fund, so this is proof to the pudding. And we really, when we look at first-time funds, we look at the individuals, what they have done, what their track record is, their individual track record, and how they work together. And because we really think that only strong teams will survive. I mean, you must have in mind a fund has a lifetime of 10 years, even longer. And so you really need a strong team which works together for that long period of time, which is longer than the average German marriage.
That's hysterical. So I'm going to pass the baton there to Greg. So you mentioned first-time teams, so you're not really a first-time team, and you're not really a first-time fund. So Greg, maybe you could introduce yourself to Jörg, because he wasn't here earlier, because I also think that you are second benchmark candidate after Marcus, so please.
Thanks. So, I have a similar story in a very different way. in the sense of creating a team and creating a strong bond between the team, and then that team evolves through multiple business models. And so in our case, we started as solar guys, and then evolved into large-scale renewables around the world, and then went into microgrids, and then it went into decarbonation of heat, and then went into the green value chain, green fuel value chain, aka hydrogen. But what I saw there is the team counts, and having your team with you and you understand each other is very useful. And then us as an investor into with now 4 and with many others, it's always the team, and it's always the nuance. So we get them, we chat on the phone, then you sit down and you go down to dinner with them, and then you have a look. How are they getting along? Do they know each other's kids' names well? Do they talk? Are they little bickering things here and there? Is the marriage already on the rocks, or is it? And so yeah, absolutely. The team, the ability to be able to evolve, and whatever crazy comes up, and there's always crazy. Is the key. And so, certainly we found a strong team for that, and that's 100% what we look at when we invest as well. What's interesting, just one side note, is there is a lot of tech out there with great tech and terrible teams. And so the question is, what do you do? Do you just let it die and go onto its way? And I think that the answer 98% of the time is yes. But every once in a while, there's some interesting business models. And so there's a group called Deep Science Ventures that gets the idea and then finds a team for it. So they have to evolve the idea and get access to the idea, IP-wise and the rest, and then they get the team to do it. So they reverse engineer the team around the idea. And that is an interesting sort of segue into how do you match ideas and teams.
If we can hand the microphone to Andreas. Andreas, it's a pleasure to meet you through Equitas and some of the work, and you've been working with the family office for years as the chief investment officer. Tell us a little bit about yourself and also how you invest and how you have it.
Yeah, no, happy to do so. So indeed, I wear 2 hats on my hat. So I'm working for Equitas, my partner there, and there we're collaborating on things like we just heard here regarding Eco2. So I have similar ideas there. And I'm still acting as a CIO for an Israeli family office / high-tech group. So it's like kind of a hybrid, and I will talk about a little bit in detail later about that. And we have also our own captive venture fund where we invest in Israeli companies where we believe we can bring more than just money, but really also network, technology, help them. And we're specialized in material science, and there can back up your statement. It takes a long time until those things flourish, but when they do, then it's great. But you indeed, and it's a good example what you just told. I can copy that. That very often you have great ideas, good technology, but some are even lacking the business model, and those you should put aside. But some there is a good business model around, but then you need the right team to execute it and has to find the right home. And that was also, by the way, just a quick glimpse into my career. I started more on the corporate side, and also had the pleasure to work for nearly 10 years in a specialty chemical company in Germany, also family-owned, and I set up there a corporate venture activity around that idea also a little bit. That there is great technology out there, which maybe sometimes corporates contradict that a little bit. The corporates can't innovate. At least the small, mid-sized ones, they can.
Excellent. Okay. Pass the baton here to Reza. Reza is a leading light in the Swiss ecosystem, chairman of a major AI technology company, but also investor.
Advice, yes. I've been involved in various form in investment in different areas, and if you look at the hierarchy, you go from real estate and core infrastructure all the way to venture capital. And the risk profile changes. When you're in a real estate or infrastructure, you're macro and political risk that drives it. As you move the risk profile towards venture, it's more on a human side and market size. So the people who have to manage that process have to have gone through some level of operation and have gone through some cycles to understand that everything is cyclic. Nothing is new, everything is cyclic. So that requires a certain amount of experience and in the sectors that are involved in. So in my assessment, one of the biggest challenges is you get not the companies are first-time fund, but the investors are first-time investors. That means they are just got out of school, they've been through some investment bank, they come out and they say, now we're going to become a venture capital, which is an expensive way to educate a PE investor, because as soon as they learn that, they want to get out because they realize that life cycle is long. You go to a buyout fund or distressed asset fund, you get a lot better returns. So one of the biggest challenges for companies is you have to look at the profile of the investors, that not only the money they bring in, but the managers. And it's not that the manager is just there to collect money and put a young person just to 80% of the time. And it's driven by 220. Okay, if you make it 130, that changes the dynamics a lot. So one of the issues related to allocating money in Europe is that. And the experience base in the Silicon Valley is much, much broader. Or used to be anyway, I don't know about now. This is why my advice to a lot of companies is, this is great here for startup. There's a lot of capital to do that. But if you want a really high growth, it's really tough to sell in Europe. You've got to go California, really. That's about it. Or maybe Shanghai, but maybe that's it. But California, I mean, that's, so it depends on what you want to do as an investor, as a company. If you want to grow slowly in the area that you're in, you're happy with the size you're in, you're sustainable, great. If you want to become a Google, you have to look at a slightly different profile of the investors also.
Now,
Can I have just a question? Why do you think it's that? I mean, there's enough capital in Germany alone to finance quite a lot of things if it would be deployed differently.
I used to be, many years ago, advisor to a very wealthy individual, one of the wealthiest individuals in Switzerland. And he was, I mean, the person could easily write millions check, and he wouldn't even have, the daily fluctuation would have been. And he was not willing to put more than 1 or 2 million into a Swiss or European company. He will write 100 million check for California. Why? And then it would get them to come and invest here, because the belief was that there are better managers there than here. That the management here is based on just a smaller circle and less commercial for the very growth areas. When you go there, on the other hand, they're driven by money. I mean, California guys, they don't care about who you know. As long as you make money, they go for it. Here, the network matters a lot. I think this is it.
Let me just say something. No, I think I've been here for 33 years, so I got a view on it. And I think it's because people believe. So I think before the early adopters, there's the early believers. And for sure, that's the role that my firm and I have played over the years, is that if you believe that something's going to happen, chances are you may get there. But if you don't believe, for sure, you won't get there, right? And so, and that seems somehow very airy-fairy and very California girl to say that. But honestly, it's true. And you can see when, I know when I sit down, and I remember the moment I met Marcus, because I thought, like, chop, chop, chop. And I was just like, oh my God, I came away thinking, it would be so cool to work with Gropius and so forth, because the level of intensity and the intent with which you build your business is just like you can feel it immediately, right? And so that's what's exciting. That's certainly why I do what I do. So I think it's actually the early believers. But I do want Theo to come in, because in your backyard in Cyprus, you have Viva Wallet. Now, Viva Wallet, how many people here know what Viva Wallet is? Let's see, we got a lot of Americans here. Viva Wallet is a unicorn payments company based in Greece. Their head of innovation, and a whole part of it is in Cyprus. JP Morgan has bought 48% of this business. Nobody in this room knew about Viva Wallet in Cyprus and in Greece. That's crazy.
And Julie, I absolutely agree with you. If you believe to something and you visualize it, it can be happen. So there's no rule about Europe or United States. And I agree with guys here that team playing crucial role to success. So if there is a clear definition of the mission of a company, and the team and people understand this mission and align their energy and focus, I think that the success is 100%. So there's no rule, I think.
Maybe I can just add one thing. We are in Europe. I've been here also a long time. Recently, yesterday, I was with an entrepreneur, and I said, "Well, this is what it is, and what you pay if you get money from California is you basically lose control. They will drive it, versus here they will get more of a partnership. You get smaller tickets, but you get more of a partnership, and the entrepreneurs are many of them are willing to do that." For the partnership role, as opposed to, yes, you may become ultimately billionaire or not at all, rather than giving giving it to somebody else to drive it.
Please, Marcus, you had
No,
another
I'm just-
comment earlier. You okay? You are?
Yeah, I think I think there are a couple of things to the fundraising side. I wanted to add one comment to the team side, and also underline what you say. I mean, I think it's also a cultural element, especially in Germany, but in Europe, failure is regarded as something really bad. Whereas in the US, there are funds which only invest in individuals or teams who failed. So they have to prove that they failed, which in Germany would be, yeah, I mean, a no winning proposition to go out fundraising and say, hey, I'm the biggest loser. Oh, I was a loser.
But it's also
Yeah.
tied to the bankruptcy law too. But
Yeah, but I think it's a cultural thing. I mean, you wouldn't find, I think, LPs for a fund which says we only invest in teams where the individuals failed. On the fundraising side, and I mean, we went through that cycle. I think it's very important also to think about which investors have the largest value added for your business. So I think it's not only the capital you're going to raise, it's also I mean certain strategic elements, and you don't want to block your exit routes by getting, for example, an industrial partner too early on in your fund, and you certainly do not want to lose control too early. So I think really thinking carefully about who to take on board is really key, and so.
No, go ahead.
Okay. Now I think there's one thing that you mentioned, culture. I think it's psychology, because there was a study, I think in October or so, that Germany, among a couple of other countries in the world, the more value lies, the more wealth lies with somebody, the higher the risk aversity becomes. And now I think at the same time, more and more wealth gets unequally distributed, right? To people that take less risks. So then you look at distressed, then you look at real estate a little bit, then you look at other stuff. You don't look at Teslas and SpaceXs, you don't look at industry change. Because if you look at industrial change, you have to take a risk, quite a risk. You don't change an industry with a couple of tens of million and with, I could do 9% if I put it in distressed. It's not ever working. And this is a big problem. So that's number one, it's a huge problem. And we have met with a lot of guys. I mean, what I did before with Delivery Hero, it was yes, financially great. Let's see if it gets ever profitable. But it's a great company. It's 50,000 people. It's in 70 countries. But it's not really changing an industry really, right? It was switching a little bit from phone to online. It's a distribution channel change, but there was not so much new technology. What we're doing now is kind of the opposite, right? With the company I'm doing now, I talk about it tomorrow. We change construction in a way. So basically what we do is we take the whole value chain of construction and we deliver multi-family buildings, produced, prefabricated, almost fully automated, 86% automation. It runs our own building operating system, so it's also proprietary in ours, and it's all timber. So it's ESG, Article 9, and we build Germany. We build a high building with 9 floors, in 3 months, and so that's a little bit of the difference, right? And almost nobody wants to invest. We raised 250 million, but to do something like this, you don't need 250 million. Like a lot of the guys I met, they spend 250 million a year with the market changes. So if you look to some families in Germany. It's not, we talk about industrial change, 250 million, sorry to say it in this room, is nothing. Yes. It's nothing, it's no money. And in Europe, that's the big problem. If you think in Europe 250 million is a lot of money, then you know why we are fucked, right? Because, no, don't get me wrong, I've lived, and I don't mean it negative, I lived in China for 4 years. For 250 million, it's nothing. For the US, it's pocket change.
the fact that you've been successful before, you've raised two funds.
Yes, but
and you've raised 250, and you say that is, for me, it's just like an incredible challenge because people say these crazy things when it's Europe and it's happened. It's like Google, I think it's called Gropius. Gropius. It could revolutionize an entire industry.
No, it's not good. We will do it. It's just a question in the end how much shares of the company we have left. So for me, it's not a question if it works because we do it for 4 years. We built the first buildings. We now got another round. We closed it in December. We add a little bit to it, but not much. So we have 200 million in the pipeline. We can in a shitty market, but we can do it somehow. But it will take a little bit longer because of the market, and we will lose more shares because we have to get more investors in at the valuation that is, in my opinion, unjustified. That's the problem.
You know why it takes so long to build a building? It's not the 3 months you needed to erect it. It's
regulation also.
It's the 13 years until you get the permission to build it.
we luckily took last time 4 months for the building permit, but you're right. But this is getting better. So this is also now, with the new construction guidelines in Germany and the government that will fly out there if they don't do something against housing shortages, like in almost every country. If you look at it, one of the biggest crises besides sustainability we ever had is housing. So yeah, that's a little bit, and I understand your point, but it's still 250 million is nothing for what we're doing. I mean, you heard it today. Tesla bought a company for 100 or 200 million just to get a little bit more into batteries. They spent 200 million very early. They bought a plant engineering company in Germany, Grohmann Automation, I think in 2016 or 17, for a lot of money. And then they said, you stop this shit now, you do it for us only, it's ours now. We don't do it for... So this is money, this is industrial change money.
On a positive side, Europe is the technology capital of the world. There is absolutely. There is US and China cannot compete. And I can tell you that. We will have a chat. Any sector you want to talk about. The real challenge here is what you just said about people are saying, how do we take technology away and we do our own? There is a lack of trust. We have here, Zurich, London, Cambridge, Delft, Munich, the great technical know-how. It doesn't, and the infrastructure is unparalleled in Europe, unparalleled. And I came from MIT. I can tell you, no, it is on infrastructure. And I mean, I moved from US to here. I'm professor. Why? Because in US, in engineering and sciences, you don't get the best student. They're all foreigners, because the best students go into finance, medicine, and law. Here, I came in, and in the university here, 70% of Swiss CEOs had an engineering degree. So that means a young man coming in, parents sitting there. So the father asked the daughter, who is this young man? What do you do for life? If he says, I'm an engineer, here it's a happy, smile. In US, not so much. Okay, so there is a value in engineering and science. Now, the problem is that it used to be moderated through large companies, large OEMs, Baron Boveries, who will pass on specification and a path for innovation. These companies disintegrated in many of the European countries, and now there is a gap. The role of venture capital is to curate, not to take away, but to curate. Bring the science and technology, bring the experience, curate layer by layer, and add the right capital and help open up the markets. This is what needs to happen.
Okay, one last comment here. One last comment quickly, and then we have to wrap it up. Marcus, one last comment? No?
I honestly am looking forward to the discussion later, because having the best engineers, but all the money flows to the US is kind of like a conundrum. So let's see how we can fix that. Maybe you have an idea. I do my best to fix it, but I'm not one of the big family inheritance people in Germany, so it's hard for me to fund it all myself.
Well, I think just on that point, I'm gonna thank you. You have some pads of paper up there with your name badges say Entrepreneur Country, and it's one of our businesses. And there's many reasons why we set up Entrepreneur Country, but I get, as an American, so tired of people telling that they had to go to Palo Alto to raise money. As a girl from Palo Alto, I found it really ridiculous that people are saying, let's go to Palo Alto. So we sell our businesses to, I sold one to Google myself, but we look for the innovation and so forth. And I thought, shoot, if I'd wanted to live in Palo Alto, I really could have lived in Palo Alto. I grew up there, right? So it seems to me that there's a European, I like the fact that it's about psychology rather than culture, because I think Europe has a great culture. I love living in Europe because of the culture. I don't think that we're deficient on culture. What is amazing to me is that the psychology is that the Americans will do it, or the Chinese and so forth, because I'm like you, I actually think this is the best place in the world in terms of innovation. And I meet people, I think Daniel's a case in point, people all the day. Daniel has built so many businesses, he's going to be on stage tomorrow. The innovation, and when Europeans hit it out of the ballpark, I know that there's just Americans that just can't keep up, right? So it's really imbalanced, but I'll just put it out there. I'm going to wrap it up myself because we do need to keep it up. I think that part of the issue, as I'm a younger child, is Europe acts like an eldest child. If you own the estate, the factory, the winery, whatever, you don't want to blow it up because you freaking own it. You're the eldest child, right? The younger child is like not coming into the inheritance in the same way. So, hey, if the cost of capital is zero, as it was for many years, you take it on and you say, hey, build it all over, throw money at the problem, okay? So if that's the case, and I go back to what I said to Jorg, I think that the real advantage in the European venture capital ecosystem is the Mittelstand, right? So now that we have the generational shift, and the keys to the car have been given to the 45-year-olds who don't trust their private bankers at all, who are saying, put your money in, whatever. That money is being given to the heirs of the big families. Those kids that are 40 years old want to build, and they want to be smart. They don't trust that anything they do is going to be safe, but if we could get them all into this room and help them socialize with entrepreneurs that say, this is the future of Europe, right here, back these people. I think we have a great opportunity for the first time because of the generational shift in wealth out of the patriarchs and matriarchs to the 40-year-olds that are managing huge sums of money, that they will choose naturally in their own interest to back alternatives. That's my little summary. Sorry for hogging the stage. Thank you all, gentlemen, for your thoughts. And Jorg, thank you for flying in. Jorg Goshen, thank you very much for your presence here today. It was very valuable for us to have your thoughts, and we'll share your presentation if it's okay with everybody. Okay, Jorg Goshen, KFW. Thank you.